Hello everyone. Today I'll be reviewing over my stock portfolio briefly, talking about my strategy and my planned option trades going forward for next week. On January 1st, the account was at roughly 4,700. I've made 36K in deposits along the way, and now that account value is at 120K, giving me a 297% gain year to date. And graphically, that is shown up here. The low point was at 4,400. The high point is at 137,000. My main holding for this account is Tesla shares, and that is my strategy to hold Tesla shares long term, and then write option contracts that are far outside the money for the Tesla shares. Additionally, I write sell puts for other stock and collect the premiums on that. And then when those stocks are in the money and I am assigned those stocks, then I turn around and sell call options on those shares. Shorting the Ford stock, and I do that as a hedge in case the overall market goes down. Then all the stocks will go down, including Ford. And at that point, that is typically when you need money, potentially for a margin call. So then I can close those Ford positions out as a profit, and then use that to meet any margin or maintenance calls, and potentially purchase additional shares of Tesla or write additional contracts. And I have a maintenance of 104K. Option buying power of 16K, stock buying power of 53K. Due to the margin balance, I don't plan on opening any additional sell puts for this week. So I will just be writing call options on the stock that I have, or selling put options on the short Ford positions that I have. So this gives a summary of my planned option trades for next week. Because CCJ is quite a bit out of the money, and I have a strike price at 11, I will be writing a 3-week contract on that, when I normally write simply a week contract. Ford shares, I plan on writing a 2-week contract on that one. And one of the reasons why I'm doing that is when you have a very low contract amount, with the regulatory fees and other fees associated with this, they can be quite expensive and eat up a good chunk of the premium. Because of that, I don't like to write any option contracts that are below $4 or $5 a share, typically. Okay, so let's go ahead and move on to each one of the individual shares. So first we'll start with the Ford. So I am shorting the Ford stock. I'm shorting a total of 2,500 shares. 1,000 shares or 10 contracts expired worthless, and so I will rewrite those options going forward for next week. For that, I'm choosing the October 23rd expiration, the $7 put, since I purchased them over $7 a share, which will give me a premium of $11 a contract or 11 cents per share. So it's one contract equal 100 shares. This represents 1,000 shares of the Ford stock I am shorting. If it does go below $7 a share, then that means the 1,000 share position that I have that I'm shorting would then be closed out and assigned to the buyer. Okay, and here's the probability analysis chart for the Ford, giving the probability that this will expire in the money. And so right now, based on the implied volatility, it is standing around 38% chance that this position, this contract that I write, will actually be in the money. And that is based on not only the price, but also the volatility of the stock, which is set at 54.11. I also do have some 650 options out, and so it also gives the probability that it will be 650 or lower, which it's putting at 4.5% chance that that could occur. Okay, so moving on to the next stock. Okay, so we have the Tesla. So I have 400 shares of Tesla, and I write a contract for each one of those 100 shares, and I typically write them at different levels. I'm going to choose the 520, 540, 550, and 560 call. And if we go back actually to the first one, I didn't talk about that. How I choose these option contracts is based on the historical data. And so I looked at the historical data going back a year and a half, and there was one single instance during the full trading week where the stock had went up 31% in that 1 week. And there was 6 occurrences where it was over 20%. And so the chance of that occurring based on the historical data is an 8.7% chance. And so given the current close at 434, that would put a 30% gain or a historical high of over 30%, right around the 565 mark. So I tried to price the majority of my options around this category. But because I am high on the margin, I do at least take one of those significantly below that. I feel pretty safe at putting it around 20%. It's a very small chance of that happening without any planned news or major events for next week. So with that, the premiums are actually quite low. And then you see the volatility is still also dropping on that as well. Now it's down to 81%. I think the previous time that we looked at this, it was 90-some%. The time before that, 140, 150%. And so when this volatility goes down, the premiums go down as well. From collecting all of these premiums, it looks like it won't make much more than really $125 roughly for the 4 contracts, for the call options that I do plan on writing. And these are the probability that those will be in the money. So for 520, 540, 550, 560. So basically single digit probabilities of that occurring. And that's why the premiums are quite low too as well. Let's go on to the last option that I plan on writing, and that is the CCJ. So that it once again expired worthless, and that is significantly out of the money. Been trading around 970 a share. This stock typically doesn't move a whole lot. It's a very low probability that it would actually be in the money for going forward for next week. And you can see the premiums are low, 1 cent, 2 cents. And again, those regulatory fees would eat up considerably amount of that premium. And it just doesn't make sense to write the premium for anything less than 6 cents for the CCJ. I'm really actually looking 3 weeks out for the CCJ, and I plan on at least collecting a premium of $10. So I'll put a limit there of 10 cents on those 17 contracts. And if it hits, that's great. If not, then I will hold the stock, and I won't sell it for lower than that on the premium side for 20 days out to expiration. They will have their earnings, I believe, on November 4th, and I expect them to have fairly decent earnings. Certainly not going to stay at this 970 level. I feel during this 3 weeks it will go and approach 11. So I should have an opportunity to write a better option price at that point. So right now with this planned trade, the probability of that occurring within 3 weeks is 16.48%. And so just to summarize back on that, listing the implied volatility here. So they're all quite low, all under 100%. Probability of that being in the money. So it looks like the forward position, the $7 put, is the most probable that it would be in the money and be assigned. Then followed by the CCJ stock, and then lastly the Tesla stock. So that would give me a total premium of $404 for the week going forward, with some of these not expiring until the week or 2 weeks after. And these are the current options that I do have in play as well. So one expiring next week already, the 650, and then another one the week after that. That's all I have for today. Thank you.